Namaste and welcome back to Bhaarat Wealth, your trusted destination for everything related to the Indian markets and financial growth. I'm your host, and today we are diving into the most volatile and exciting 2 weeks of 2026. Last week, we have not uploaded our weekly video. We cover it all in this video. From historic market sessions to the final pre-budget jitters, we've got a lot to cover. If you're new here, don't forget to hit that subscribe button and join our growing community of smart investors. Let's get started. The final week of January 2026 has been a roller coaster. The Sensex and Nifty 50 faced significant pressure, ending the week down roughly 0.4%. As of January 30th, the Sensex is hovering around the 82,270 mark, while the Nifty is struggling to stay above 25,320. While we saw a brief 3-day winning streak midweek, profit booking in heavyweights like metals and IT dragged the indices lower on Friday. The India VIX, our market fear gauge, is sitting near 14, suggesting that while volatility is present, investors are largely in a wait-and-watch mode for the big event tomorrow. Break out your coffee, because the markets aren't taking a weekend break. In a rare move, the NSE and BSE have confirmed a special live trading session this Sunday, February 1st Street. Since Finance Minister Nirmala Sitharaman is presenting the Union budget on a Sunday, the exchanges will operate during standard hours, 9:15 a.m. to 3:30 p.m. This allows for real-time price discovery, ensuring you can react to every tax announcement and fiscal reform the moment they hit the floor of the parliament. The heavy hitters. FMCG giant ITC hit a 52-week low this week as fears of a sin tax hike in the upcoming budget triggered a massive sell-off. Investors are worried that the government might significantly increase excise duties to fund new social schemes. While ITC's non-tobacco business is growing, cigarettes still drive the lion's share of profits, making the stock highly sensitive to tomorrow's announcement. The biggest elephant in the room just got bigger. Rumors of a 40,000 crore rupees Jio IPO are intensifying. Analysts are predicting that Mukesh Ambani might use the budget momentum to announce a mid-2026 launch. If this goes through, it would be India's largest ever public issue, potentially reshuffling the weightage of the entire Nifty 50 index. Adani Power defied the general market gloom this month. The company reported a massive jump in Q3 profits, driven by high demand and improved operational efficiency. On top of that, they successfully raised 7,500 crore rupees through non-convertible debentures. This capital is earmarked for massive expansion, signaling that the group's growth engine is back at full throttle. Nestlé India provided a delicious surprise to the markets. The FMCG major reported a nearly 46% year-on-year increase in profit. While other consumer stocks struggled with high input costs, Nestlé's pricing power and strong volume growth in the premium segment have made it a top pick for analysts heading into February. Banking resilience is real. Axis Bank touched fresh 52-week highs this week after beating street estimates on net interest margins. Their asset quality has remained remarkably stable, and with credit growth in India still clocking double digits, Axis is emerging as the dark horse in the private banking space. Construction is booming. Ultratech Cement reported a stellar Q3, with profits surging on the back of rising sales. As the government continues its push for massive infrastructure projects, Ultratech's performance is being seen as a proxy for India's physical growth story. Keep an eye on cement stocks if the budget increases capex for the PM Awas Yojana. VI shares skyrocketed after CEO Abhijit Kishore announced a massive 45,000 crore rupees investment plan. This 3-year capex is aimed at upgrading their network circles and finally taking the fight to Jio and Airtel in the 5G space. While debt remains a concern, the market is cheering this return-to-growth strategy. Index heavyweight HDFC Bank saw heavy selling on the last trading day. Institutional players seem to be, quote, lightening their portfolios ahead of the budget to hedge against any negative surprises. Despite the fall, many long-term investors see this as a, quote, buy-the-dip opportunity, given the bank's dominant market position. Larsen & Toubro is expected to surpass its 10% order growth target. Major brokerages have upgraded the stock this week, citing a massive pipeline of domestic and Middle Eastern projects. L&T remains the gold standard for Indian engineering, and any budget focus on railways or green energy will only help their cause. Zomato continues to see steady accumulation. Its quick commerce arm, Blinkit, reached new milestones in daily active users this month. The market is increasingly valuing Zomato not just as a food delivery app, but as a logistics powerhouse. If the consumer durables sector gets a boost tomorrow, expect quick commerce stocks to follow suit. Sectoral hits and misses. A brutal week for metals. The Nifty Metal Index crashed 5% in a single day as global commodity prices cooled. With the US dollar strengthening and China's industrial demand remaining stagnant, heavyweights like Hindalco and Tata Steel faced the brunt of the sell-off. It's been a rough week for tech investors. Giants like Infosys and Wipro faced heavy selling pressure, dragging the Nifty IT index down by 2%. While the long-term AI outlook is strong, short-term concerns over global IT spending and high U.S. bond yields have led institutions to hit the pause button. Nifty Defense remains one of the few green sectors this month. Fueled by expectations of a 15% hike in the indigenous procurement budget, stocks like HAL and BEL have seen strong, pre-budget accumulation. This is one of the few sectors where the government's Make in India vision is translating directly into order books. Expectations of income tax relief in the budget have given a late-month boost to consumer durables. Stocks like Dixon and Havells are rallying on hopes that a tax cut for the middle class will lead to higher discretionary spending on electronics and home appliances. The SBI-led PSU Bank rally remains intact. These banks are benefiting from incredibly clean balance sheets and rising interest margins. As the government continues to use PSU banks for its massive infra funding needs, their stock prices are finally reflecting their true book values. While large caps struggled, the BSE Small Cap Index actually rose 1.25% on Friday. This divergence shows that retail investors are still aggressively hunting for value in the broader market, even as big institutional players pull back from the Nifty 50. Urban housing incentives are expected in tomorrow's budget, driving a 15% weekly rally in developers like Raymond Realty. The theme of premiumization in Indian real estate is stronger than ever, and investors are betting on further SOPs for the sector. Adani Green and Suzlon are back in focus. The government has hinted at new subsidies for offshore wind energy projects, and these companies are best positioned to benefit. The energy transition remains a top priority for India, making this a high-growth, high-conviction sector. Global and institutional trends. A historic milestone. India and the EU have concluded negotiations for a comprehensive trade agreement. This is a massive long-term win for Indian exporters in the seafood, metal, and textile sectors. It signals India's growing importance as a global supply chain partner. Foreign institutional investors have offloaded over 38,000 crore rupees in January. This aggressive selling streak is driven by higher yields in the US and a cautious outlook on India's current valuations. However, the intensity of the selling seems to be cooling off as we approach the budget. Domestic institutional investors have been the superheroes of January. By pumping in nearly 67,000 crore rupees, they have successfully prevented a total market collapse. This shows the incredible depth and maturity of the Indian domestic investment ecosystem. The Indian rupee hit a historic low of 91.98 against the dollar this week. While a weak rupee helps our IT and pharma exporters, it significantly increases the cost of imported oil and electronics. This is a double-edged sword that the RBI is watching very closely. Rising tensions in the Middle East have pushed Brent crude towards $70. For a country that imports over 80% of its oil, this is a major concern. Any further spike in oil could lead to higher inflation, potentially delaying the RBI's interest rate cut plans. The primary market remains white-hot. Shadowfax and Fractal Analytics saw their IPOs oversubscribed within hours. Despite the secondary market volatility, the sheer amount of liquidity waiting to enter new-age growth companies is staggering. Adani Group stocks saw a 6% relief rally late this month. Reports emerged that the group is in talks to settle legal hurdles with the US SEC regarding the service of summons. Resolving these legal overhangs is crucial for the group to regain full international investor confidence. Mahindra and Tata Motors saw late-week buying interest. Rural demand indicators in the latest economic survey showed a significant uptick, which is great news for tractor and SUV sales. The market is betting on a strong recovery in the rural economy throughout 2026. Gold prices are nearing $5,600 per ounce. This safe haven demand is great for the general economy, but even better for gold loan NBFCs like Muthoot and Manappuram, as the value of their collateral increases, allowing them to lend more aggressively. The U.S. Federal Reserve's decision to keep rates at 3.5% has tempered hopes for aggressive rate cuts. This, quote, higher for longer stance is keeping the dollar strong and putting pressure on emerging market currencies like the rupee. A massive milestone for India. We now have over 23 crore demat accounts. This massive army of small investors is keeping its fingers crossed for a rollback in the securities transaction tax. The retail investor is no longer a small player. They are the backbone of the market. The economic outlook. To wrap up, let's look at the bigger picture. The Economic Survey 2025-26, presented on January 29th, has projected a rock-solid GDP growth of 7.4% for the current fiscal. Chief Economic Advisor V. Anantha Nageswaran noted that while global risks are high, with a 10 to 20% chance of a global crisis, India remains a bright spot. With inflation cooling to a record low of 1.7% earlier this year, the stage is perfectly set for a growth-oriented budget tomorrow.
And that's a wrap on our pre-budget special. It's been an intense 2 weeks, but the real action starts tomorrow at 9:15 a.m. Let us know in the comments below. Until next time, stay invested, stay informed, keep building your wealth with Bhaarat Wealth. Like, share, and subscribe to Bhaarat Wealth now. Click the bell icon for weekly market updates. Stay tuned. Jai Hind. This video is for information and education purposes only.